Get ready for explosive news. ARM Holdings stock just whipped and tumbled after its fourth quarter earnings report. We dive deep into why ARM beat top and bottom line estimates, showcasing massive growth in the data center sector. But then we uncover the critical supply chain risks the company is facing with its brand new AGI CPU chip. This is huge for the semiconductor world, and you need to know exactly what happened.
Stop using your finger for notes, sketches, and edits. This Jam Jake stylus pen gives your iPad a smoother, more precise writing feel with palm rejection so your hand can rest naturally on the screen. It charges fast, works for hours, and comes with replacement tips. Perfect for school, work, or creative projects. Check the link in the comments to grab it on Amazon.
Next up, we are looking at the bullish outlook for ARM stock from major financial institutions. We'll break down the recent price target hikes from Guggenheim, Needham and Company LLC, and others, revealing exactly how analysts are seeing potential upside for this powerhouse company and what that means for your portfolio right now. We continue our deep dive into the analyst consensus and insider activity surrounding ARM. We examine the recent stock movements, including sales by CEO Renee A. Hawes and CFO Jason Child, and look at the overall analyst ratings, determining if the current moderate buy consensus is enough to drive the next big move. Finally, we analyze the full picture. ARM Holdings posts record revenue, but the stock slides 7%. We dissect the conflict between the booming AI demand for the AGI CPU and the near-term headwinds from smartphone unit growth and memory shortages. Stay locked in, because we'll tell you the exact catalysts to watch for next week and what these supply constraints truly mean for the future of this technology. ARM Holdings shares experienced significant volatility following the company's fourth quarter earnings report, initially surging on positive financial results, but subsequently declining amid supply chain concerns related to its new CPU. The stock initially popped after reporting results that beat both top and bottom line estimates, driven by strong growth in the data center segment, mirroring trends seen among competitors like Intel and AMD. ARM reported 20% revenue growth to $1.49 billion, with royalty revenue climbing 29% and licensing revenue increasing by 11%, although weakness in the smartphone market impacted these figures. Adjusted earnings per share also surpassed expectations, rising to 60 cents from 55 cents. However, the positive sentiment reversed during the earnings call when ARM disclosed potential challenges in securing sufficient chip supply to meet escalating demand for its new ARM AGI CPU. This is the first time the company is selling its own silicon rather than solely relying on licensing and royalties. As of 11:28 a.m. ET, the stock had dropped by 8.8%. ARM has seen substantial recent gains, fueled by anticipation surrounding its new AGI CPU chip and growing demand driven by agentic AI. The company projects $15 billion in annual revenue from this chip by 2031, with major growth anticipated between 2029 and 2031. Investors are now closely monitoring the success of this new CPU as a critical factor for the stock's future performance. ARM's fiscal first quarter guidance projected revenue between $1.21 billion and $1.31 billion, and adjusted earnings per share between 36 cents and 44 cents. Analysts caution that while supply constraints present a challenge, the long-term outlook hinges on the successful market adoption of the AGI CPU. The report also briefly noted that ARM Holdings was not included in a recent list of top investment recommendations by the Motley Fool. ARM Nasdaq ARM, a global semiconductor intellectual property company specializing in energy-efficient processor architectures, has seen its analyst price targets increase across several major brokerage firms, signaling growing investor confidence. Guggenheim raised its price objective from $240 to $255, maintaining a buy rating, suggesting a potential upside of 18.73% from the previous close. Similarly, Needham and Company LLC boosted its target from $200 to $255 with a buy rating. Royal Bank of Canada also raised its target from $130 to $175, issuing an outperform rating. HSBC upgraded its rating from reduce to buy and increased its price target from $90 to $205. Evercore, however, adjusted its outlook, cutting its target price from $215 to $170 while maintaining an outperform rating. Weiss Ratings maintained a hold C rating. Overall, 19 analysts currently rate the stock a buy, 6 a hold, and 1 a sell, resulting in a consensus target price of $186.08 and an average rating of moderate buy. /N trading activity on Thursday saw ARM stock dip by $22.53 during midday trading, settling at $214.77, with 13,548,984 shares exchanged against an average volume of 7,581,934. The company holds a market capitalization of $226.9 billion and trades at a price-to-earnings ratio of 287.09. The stock's 50-day simple moving average stands at $152.53, while the 200-day average is $138.08, placing it between its one-year low of $100.02 and one-year high of $239.50. /N in its last quarterly earnings report released on April 1st, ARM reported earnings per share, EPS, of 60 cents, a net margin of 17.15%, and revenue of $1.49 billion. Analysts currently forecast an EPS of 85 cents for the current fiscal year. /N on an insider front, CEO René Ahaz sold 9,299 shares on April 14th, while CFO Jason Child sold 21,280 shares on April 22nd. Additionally, insiders sold 83,712 shares over the last 90 days. Institutional investors and hedge funds collectively own 7.53% of the company's stock, with recent activity showing some funds increasing stakes, such as Compound Planning Inc. and Ritholtz Wealth Management. /N ARM operates by licensing its core processor designs, including CPU families like Cortex and Neoverse, GPU IP, and neural processing units, rather than manufacturing chips directly. The company was founded in 1990 as a joint venture between Acorn Computers, Apple, and VLSI Technology, and is headquartered in Cambridge, England. ARM Nasdaq. ARM stock has seen positive momentum following recent analyst rating upgrades, signaling potential upside for investors. Wells Fargo & Company recently raised its target price for the stock from $220 to $255, maintaining an overweight rating and projecting an 18.73% potential upside from the current price. The analyst sentiment surrounding ARM remains largely positive, although varied. KeyCorp reaffirmed its overweight rating. Evercore adjusted its outlook, decreasing its price target from $215 to $170 while maintaining an outperform rating. Deutsche Bank Aktiengesellschaft reiterated a hold rating. HSBC issued an upgrade, moving from a reduce rating to a buy, and significantly raising its price objective from $90 to $205. Susquehanna also boosted its target price to $210 and assigned a positive rating. Overall, 19 investment analysts currently rate the stock with a buy, 6 with a hold, and 1 with a sell. The consensus rating from Channel YouTube is moderate buy, with a consensus price target of $186.08. Trading activity for ARM on Thursday saw the stock trade down $22.53 to $214.77 on a volume of 13,548,984 shares, compared to an average volume of 7,581,934. The company holds a market capitalization of $226.9 billion, with a P/E ratio of 287.09 and a beta of 3.4. Its 50-day moving average is $152.53, and the 200-day moving average sits at $138.08. In terms of recent performance, ARM posted quarterly earnings on April 1st, reporting 60 cents earnings per share on $1.49 billion in revenue, achieving a return on equity of 14.01% and a net margin of 17.15%. Analysts project ARM will post 85 cents EPS for the current year. In insider activity, CEO Rene A. Haas sold 23,867 shares on March 25th, and CFO Jason Child sold 21,280 shares on the same day. In the last 90 days, insiders sold a total of 83,712 shares, valued at $13,614,730. ARM operates as a global semiconductor IP company, specializing in designing energy-efficient processor architectures and related technologies, including CPU core families like Cortex and Neoverse, GPU and multimedia IP, and neural processing units. The company utilizes a licensing and royalty business model rather than manufacturing chips. Institutional investor activity has been mixed, with several entities including DekaBank Deutsche Girozentrale, Spartan Wealth Advisory Services LLC, Ascent Wealth Partners LLC, AssetMark Inc., and Steelpeak Wealth LLC recently buying or growing their positions in ARM. Institutional investors collectively own 7.53% of the company's stock. ARM Holdings reported record fiscal fourth quarter results on May 7, 2026, delivering $1.49 billion in revenue, surpassing analyst expectations, and an earnings per share of 60 cents beating the 58 cents estimate. Licensing revenue surged 29% year-over-year to $819 million, while royalty revenue climbed 11% to $671 million, driven by strong new design wins and existing shipments. Despite the financial beat, the stock experienced a sharp decline, falling 7.25% to $220.10 in morning trading, reversing a previous after-hours surge. This downturn was triggered by management's commentary regarding significant supply constraints. CEO Rene Haas disclosed that customer demand for ARM's in-house AGI CPU has doubled to over $20 billion within 6 weeks, with existing customers committing to more than $2 billion in orders over the next 2 fiscal years. However, Haas warned that manufacturing capacity limitations restrict revenue conversion, as supply commitments are currently secured only for the first $1 billion tranche. Furthermore, the company flagged that smartphone unit growth is projected to turn negative due to a memory chip shortage impacting the handset supply chain, a segment crucial for ARM's ecosystem. Conversely, ARM maintained strong momentum in the artificial intelligence and data center sectors. Management upgraded its AI data center growth outlook, citing rapid adoption of ARM-based server CPUs by hyperscalers, where ARM holds approximately 50% of the CPU compute market share among major cloud operators like Oz and Google Cloud. This positioning remains a key driver for shareholders, as hyperscalers favor ARM silicon for power efficiency in large language model workloads. Analysts noted that supply constraints led management to withhold raising the revenue forecast, framing the supply issue as a near-term overhang. While the AGI CPU launch presents long-term upside, the immediate revenue impact is deferred. Operating expenses continue to rise due to investments in in-house chip design teams, adding margin pressure. Key catalysts for investors moving forward include updates on incremental wafer allocations from foundry partners, confirmation on expanding committed customer demand, and signs that the memory chip shortage in handsets is easing. The market is currently focused on separating the temporary supply-driven revenue cap from the underlying strength of the AI and data center franchise.